Hello everyone. Today we are taking a deep dive into Visa Inc., the global payments network that connects consumers, merchants, banks and governments in over 200 countries and territories. We'll explore what the company does, how it is performing, what its growth drivers are, what risks investors should know, and whether it has a place in a portfolio today. Visa essentially operates one of the most important financial infrastructure platforms in the world. It does not bear the credit risk of the cards in most cases, but it earns revenue by processing transactions, by data processing, by cross-border transactions, and by service revenues tied to volumes. When people spend, Visa benefit. When free cash flow is strong, Visa has the capacity to return capital via dividends and buyback. That set of economics makes it appealing for many investors. Let's look at the most recent quarter. In its fiscal third quarter of 2025, Visa reported net revenue of approximately $10.2 billion, which was about 14% higher than the same period a year earlier. On a non-GAAP basis, net income came in around $5.8 billion, or about $2.98 per share, representing roughly a 23% gain year over year. On a GAAP basis, the net income was about $5.3 billion, or $2.69 per share. These results reflect payment volume growth of roughly 8%, cross-border volume growth of about 11% excluding intra-Europe, and processed transactions up about 10% year over year. The company ended the quarter with around $20.4 billion in cash equivalents, and investment securities. These numbers show that Visa remains a strong cash-generating business with resilient consumer and business spending driving its network. So what is driving the growth? A few key things. First, consumer spending in many markets remains resilient. Both discretionary and non-discretionary categories are contributing. Second, cross-border and international payments activity is rebounding as travel and global commerce recover. Third, Visa is investing in innovation, including its Visa as a Service platform, stablecoin settlements, and other fintech adjacent initiatives which could open new payment rails and expand its addressable market. For example, the company noted stablecoin settlement volumes are running around $1 billion in run rate, reflecting early traction in that area. Now, on the capital return side, Visa is returning meaningful cash to shareholders. In that quarter, it repurchased about $4.8 billion of its own shares and paid around $1.1 billion in dividends. That highlights the strength of its cash flows and the board's confidence in capital allocation. However, there are important risks and caveats. While growth is solid, much of it is volume-driven and may face headwinds if consumer spending weakens, interest rates remain elevated, or regulatory changes impact payment networks. Cross-border growth, though positive, is also more volatile and could decelerate if travel or global trade slows. Fintech disruption remains a possibility. Stablecoins, real-time payments, regulatory changes could pressure interchange or network margins. Additionally, valuation for a company like Visa is not necessarily cheap. Investors must weigh how much growth is already priced in. The guidance for the next quarter and full year suggests revenue growth in the high single-digit to low double-digit range and earnings per share growth in the high single-digit range. That means investors may need patience. From an investor's perspective, Visa offers a compelling mix of scale, strong cash flows, global reach, and a long runway of payments growth. For those seeking a relatively lower risk growth stock in the financial infrastructure space, Visa could be a core holding. But if you are looking for hyper-growth, you may not find it here. Rather, you get steady growth, margin expansion, and capital return. The key questions you should monitor: does Visa continue to grow payment volumes and cross-border transactions? Does it expand its fintech and alternative payments initiatives meaningfully? Does margin expand or hold steady? Does regulation or competitive pressure bite? And does the company keep generating strong free cash flow and returning it effectively? In summary, Visa remains one of the premier plays in the payments network space. The latest results show solid top-line growth, resilient volumes, strong cash generation, and shareholder returns. It isn't the fastest growing stock in the market, but for many investors, that is the feature, not the bug. If you believe payments will continue scaling globally, digital commerce will expand, and Visa will remain a network beneficiary, then it has a logical place in a portfolio. On the other hand, if you worry about consumer spending decelerating, fintech disruption accelerating, or regulatory risk, you may want to wait for a more compelling entry point. Either way, Visa is a company worth watching.